Hello, good morning and welcome to this edition of Buy Now, Sell On ET Now. I'm Cheryl D'Souza along with Mubina Kapasi.
And yes, like Cheryl flagged off, it's yet another day of losses on Dalal Street. This time around, we've slipped below the 11,000 mark as well. 10,935 is where we are currently trading at. And remember, one can expect significant amount of volatility also because it is the last day of the September series. It's something that is going to perhaps cause a lot of volatility. Mind you though, only 3 gainers on the Nifty 50 led by a Bharti Infratel that's gaining 3.5% odd. DRL and Nestle India too are among the big losers. The big gainers. But apart from that, it's all the other stocks that are in the red. Nifty Bank once again tanking big time. IndusInd Bank losing 4.4%. Bajaj Finance too, and Tata Motors as well are among your top Nifty losers. M&M and TCS are as well big losers. Look at the mid-cap and the small-cap index. The declines being witnessed over there are much more sharper compared to the benchmarks. The Nifty mid-cap is falling more than 2%, as is the case with the Nifty small-cap index. So a massive fall being witnessed on the Dalal Street. The Sensex too is losing and it's in fact threatening to breach the 37,000 mark. So that's about the equity markets and what exactly is up right now. Okay, well now let's introduce the guests for today. We have with us Kunal Bothra on the technicals and Mr. A.K. Prabhakar of IDBI Capital Market Service on the fundamentals. Morning, gentlemen. Kunal, expiry day and, it's not been the best week for the Dalal Street. The September series will perhaps end in the red, largely because of what we've seen in the last week.
Well, absolutely, Mubina. Good morning, first of all. So, the last week, the last 5-6 days have been, very brutal for the markets. I think especially, from stock specific and especially from the large cap front, because I think that's where a lot of pain has, come back into the system. So, everyone is of the view that mid caps would now take a, bit of a, I would say corrective phase. Then it's completely reversed, where the large caps have started to see some aggressive selling. So you can call it profit booking, you can call it risk aversion or risk off mode, which is happening. But then I think the damage and the sell-off which you see in the large cap names is quite brutal. Now that aside, I think when you look at the charts as such, and when you look at the indicators and the market internal data as such, the entire month of September series, or the entire series of September, there was a built-up at 11,000 put option, 11,000 strike put option. Now that generally indicates that put writers had started to write the put option expecting that the index will not break that 11,000 mark. We had a touch and go moment yesterday as well. If you remember, the Nifty managed just touch that 11,020-ish kind of levels and then bounced back, almost 100 plus points from those kind of levels. Now today, the opening itself, the Nifty took broke below its 11,000 mark. So I sense that today, being the expiry day, there should be a strong fight at this 11,000 mark. We need to see whether there is unwinding of those put writers, which is actually happening. And if that's the case, then I believe that the closing should be below the 11,000 mark today on the Nifty futures. So I think in that regards, the choppiness and the volatility should continue till the second half of the day. And I think today's expiry would be completely different in how we have been accustomed to the monthly expiries of being more docile, more subdued kind of a market. Today, I think it's going to be a very, very high volatile market on the expiry. And I think for traders, you have to watch out for how the 11,000 put options or the put writers, take the positions, whether they are looking to unwind, because if that happens, then I think more and additional pressure could be felt on the Nifty as well.
All right. Before, I get on board your ideas, Kunal, let me also go to Mr. Prabhakar and, get in his sense on what he's reading into this rapid fall being witnessed in the equity markets. And Mr. Prabhakar, morning. And once again, when the markets were rising, we the mid and the small cap indices that managed to outperform. Now that the markets are falling, you're once again seeing the quantum of losses in the mid and the small caps being sharper. So what's your take on the overall markets?
We need to understand this was a liquidity-driven rally. Now with the dollar getting stronger, the liquidity is flowing away from emerging markets. So in last 3 days, if we notice, foreign funds have been sellers, more than 6,000 crores in Indian market. And I think this outflow would continue. And see, the major part of the move has been Reliance. So Reliance has taken the market up majorly, but even IT and pharma, which is supported now with these Tata Sons likely to sell some stake somewhere. So that IT as a pack is also started to correct, and we have cut 11,000 level. Once a correction starts, I think it is likely to be a deeper correction. And when large cap corrects, 10%, mid cap and small cap normally corrects 20-30%, because these were driven by liquidity. Maybe because of low interest rate in India, many new investors came and they have driven up all these mid cap and small cap. But the kind of IPO and kind of promoter rising funds, the liquidity has been sucked up. So without liquidity, I don't think market can sustain current level. I expect market very soon to correct below 10,000 also.
All right. And we often say that when the IPO market hots up, it's perhaps also an indication that, maybe the market is topping up. Kunal, now let's go across to you for your high risk and low risk ideas at this juncture.
Well, I think everything is high risk in this market, Mubina, so there are no two doubts about it. But I still try to categorize, separate trades as high risk and low risk. The first one is Indigo Aviation. The stock forming a very clear kind of a bearish head and shoulder pattern at this 1210, 1220 odd mark. So I believe that could be a good shorting opportunity from current levels. Targets 1160, stop loss 1255. And the second would be a buy idea, but I'll call it as low risk because of the low beta nature of the stock price. But ITC is what I would recommend as a contra buy. I would sense that once the selling is out for the stock, there should be a very strong comeback. And FMCG overall generally acts as defensive. We've already seen ITC falling for the entire last 1.5 or 2 months. And I believe that the stock is now trying to tap back into very strong kind of support territory. So oversold indicators, strong support zones on prices. This could warrant a very strong comeback on a stock like ITC. So more of a positional play with a time frame of 1 to 2 weeks approximately. Targets of 184 and stop loss at 163.
What about you? What is it that you'd pick out for our viewers for both high risk and as well as low risk?
I think FMCG as a sector has not performed. In that, I think ITC offers a lot of value at current level, but it is for a long-term investor, not anything in short term. The dividend yield alone is 5%. I even like Hindustan Lever. If it corrects another 5 to 8%, it would be a great buy at current levels. At 5 to 8% lower, it is a very good buy. But I would totally avoid banking and NBFC. I think this sector, maybe next 1-2 years, the recovery will be very difficult. So one can avoid the sector and look for deeper cut to buy these sectors.
All right, and those are the queries coming in from our experts this morning. Let's get on board. Our first viewer query then. And first email query that we have is from Pranshu Mathur from Delhi, India. He's written to us saying that he's bought 3,702 shares of Bharti Airtel at 513 rupees per share. He wants to know whether he should hold or sell the counter. Kunal, I'll come first to you. Bharti Airtel, we've seen what is happening to that particular counter. Yesterday it was down about 8% in trade. Today is down almost 1% in trade. What should our viewer do? Should he continue to hold on to Bharti Airtel, considering what's happening in the telecom pack as well?
I think the stock is now entering into one of the difficult phases, Cheryl, frankly, because over the last, I would say 1.5 or 2 years, the stock had relatively shown a stronger degree of outperformance to Nifty. So you have to understand that Bharti Airtel did exceptionally well in the entire 2019, and I would say a good part of 2020 as well. It was one of the few large cap names which did not fall majorly below its 200 moving average, even in the Feb and the March correction, where almost, I would say majority of the stocks on the large cap front had been beaten significantly down below the 200 moving averages. But this fall, for Bharti Airtel comes as a bit of a, I would say, a surprise because of the position building, which showed some contrarian signals on Bharti Airtel. So I, for one, have been quite intrigued with the sell-off on Bharti Airtel, especially the last 40, 50 points of sell-off from 470, 475 support to a 430ish where the stock is trading right now. So I would sense that wait for maybe a week or if there is any kind of a short covering on Bharti Airtel, then I believe that the stock can come back to a 470, 475 levels in the very immediate short term because of the I would say contrarian nature of the position building on the futures and options segment for Bharti Airtel. But then if you have to have a stop loss on Bharti Airtel, then I believe closer to 405, 406 is where you see some slew of supports on the long-term basis for Bharti Airtel, and especially the previous swing support which was tested in the month of February and March for Bharti Airtel. So I would say keep that as a stop loss, and then let's hope for some bit of recovery. If the recovery happens for Bharti Airtel, I think it should come back closer to 470-ish kind of levels, and that probably could be a good exit point for you on Bharti Airtel. So that's what I would recommend for your trade on Bharti Airtel since you bought at 510 kind of levels.
All right. Prabhakar, what's your view on Bharti Airtel? What's happening in the telecom space? A renewed tariff war, this time on the postpaid front. Last 1 month has not been good for Bharti Airtel. So what would you advise our viewer to do? Should he hold on to the counter or should he go ahead and sell it?
If he has 3 years, 5 years view, then it is the best hold. But short term, there are a lot of pressure. First thing, everybody expected ARPU to go up, but Jio has continued with its tariff war, and that is impacting the prices also, and that is why the correction has happened. And the important thing, the Supreme Court judgment where AGR, each one has read that judgment in their favor. So now, DOT is saying that 10%, whatever is paid is paid. Now, whatever is a balance, 10% they have to pay. That means, every company has to shell out. Many companies thought that whatever we have paid, they will adjust in the 10%. That is not the case, is what Department of Telecommunication is saying. So it is about how we read the judgment. So I think there some clarity is needed. And important is, Bharti Airtel has bought one company in UK, which is called OneWeb, where they will launch, along with the UK government, they will launch a lot of satellites, which are low satellites, which can give last mile connectivity. So this project to come on stream would take some time, maybe 1-2 years. So for a long-term investor, it offers value. But short-term, I don't know whether the bottom is formed or not. There can be more correction. But someone who is looking at 3 to 6 months should not be in the stock. Somebody who is looking at 3 to 5 years, I think this is the best stock to buy.
Okay, well, there you have it. That's the recommendation coming in on Bharti Airtel. Let's move on and take on board our next query. Akshay writes into us from Dubai. He says, I've bought 100 shares of Deepak Nitrite at 689 rupees. Wants to know if he must hold or sell. Kunal, yesterday you had recommended this one as one of your high-risk ideas. Our viewer is in the money. What is your recommendation? I mean, what's the target you're watching out for?
So exactly, I mentioned it yesterday as well, and the reason for that is because even in this last 1 week, 2 week of market volatility, or I would say heightened volatility of market, Deepak Nitrite has been one stock which has been holding its ground. So I would say the previous high or the previous intraday high, swing high for Deepak Nitrite was around 880, 885 zone, and the stock is at 816 level. So it's hardly any major correction for the stock price. And looking at what the stock had done in the last 6-7 months, from 350 to a 900, so it's almost run up 2.5x or 3x. The correction expected could have been much more higher. Now, I would sense that so far the prices are showing signs of very stable kind of trend, and that generally augurs very well for medium to long-term prospects. So whenever the market recovers, these are the stocks which have corrected the least and still trading at their higher end of price levels, I think are the ones to try and rally up first. So I believe in that regards, since you already have a lot of cushion on Deepak Nitrite, you can continue to hold. Just as a risk covers mode, if you're expecting that the market would probably correct more further, then you can probably book out partial profits over here, and then then wait for the stocks to come back lower and then try and average out further. But then I think if you're not if you can digest that kind of a risk, since you already have buffer then I believe you should hold on to your investments on Deepak Nitrite since you bought at much lower levels. I, for one, believe that the stock should be heading towards a 940, 950 kind of levels whenever the market recovers and whenever you see the mid-cap end of the market recovering quite well.
You know, the stock has actually seen quite a nice steady up move in the last 6 months, 1 year as well. Just the 1 year chart will show you that it's quadrupled really. So good going for a Deepak Nitrite. Okay, fundamental view then, Mr. Prabhakar, what's your opinion on this one?
See, the way company has grown in the last 4 years is amazing. Now in FY16, the revenue was 800 crores. Now FY20, the revenue is 2,200 crores. Now, that kind of growth, if a company can give, I think these are companies which are likely to give, and they have gone for an expansion plan with 1,700 crores in phenol. I think the specialty chemical, India will emerge as the second leader next to China. I think we have an advantage, and many countries are likely to buy from India. So I think make in India and buy from India would be the concept. Because of Chinese dominance, many countries would like to do business with India. So that is where I think specialty chemical and even pharma is going to benefit in India.
All right, and that is the view coming in from our experts on the query for today. And let's now move on to our chart buster segment where Kunal is here to decode the special chart on the Dow versus Russell 2000. Kunal?
So, ideal comparison, Cheryl, when you look at large cap versus small caps, you tend to, check and assess the market breadth, that how the market is moving or the market breadth is moving in sync with the, major indices. So, as you can see on the, chart over here, there are two lines which have been marked, the black colored and the blue colored line. The black line is the Dow Jones, industrial average, the major index, as well as the blue line is the Russell 2000 index. Now, you can see from the March, the Feb March lows, both the indices, they started to move in tandem higher. Both the indices started to make swing highs. They were almost, very, I would say successive and consecutive, pattern breaches which were there. Both these indices tend to, show some good, synchronized price uptick. But then the shaded region and the month of August is where you saw, a strong degree of divergence coming into, both these charts. Now, Dow Jones, that's a black line, has made a significant and a relative higher high, as you can see on the chart over there. But the blue line, that's the Russell 2000, has apparently made a double top kind of a formation. So which means that right from the month of August, the Dow Jones was actually forming, some sort of a, or the market breadth, of, the US markets were actually showing some sort of, resilience. And I think that's where the Dow and, many of these indices are now facing pressure. Few days back on the same chart buster segment, we discussed that how the Dow Jones had formed a bearish head and shoulder pattern. So both of these, gel very well, where the Dow Jones has formed a bearish chart pattern, as well as the small cap end of the market or the US market is also showing some signs of a negative divergence. So I think both of them are getting into now a mean reversion mode or a realignment mode, which I believe could take some more time. That indicates that both the Dow Jones as well as the Russell 2000 could probably go through more downward drift.
Okay, so that's, Kunal Bothra, as always, joining in on our Chart Buster segment. Well, on that note, gentlemen, thank you so much for joining us on today's episode of Buy Now, Sell Now and helping our viewers out with their queries. Time for our ET Now Insight segment. The September FNO series expires today, and we have Jayesh Khilnani joining us with the analysis of the month gone by.
The Nifty and Nifty Bank are set to snap their 3 series gaining streak as of September end FNO series. And the rollover picture is not too enthusing as well, because if you have a look at the Nifty's rollover, which stands at nearly 54% as compared to the 3-month average of 61%, while on the other hand you have the Nifty Bank's rollover, which stands at about 58% as compared to the 3-month average of 53%. So not too enthusing as far as the long-term average is concerned. But let's move on to the sectors which have performed extremely well and not done so well. Starting off with the India VIX index, which is up double digit for this series itself, and it is in fact on track to snap its 5 series losing streak. You have not too many sectors which have ended on the positive side for September series, with the IT index gaining the most, 9.5%, and it is also on track to gain for the 4th series in a row. While on the flip side you have a lot of double digit losers, the likes of Nifty Bank, Nifty Metal, as well as the Nifty PSU Bank, which is the worst performing index and also on track to post the worst series that we've had since March 2020. And there has been a lot of high flying stocks as well. Let's have a look at the stock gainers as well. You have index names like Wipro, Dr. Reddy's, along with HCL Technologies that make it into the top 3 with about 14 to 15% gains in this series itself. And you have Coforge along with Mindtree. So you can see that it has been a primarily IT dominated series. As far as the stock losers are concerned, you have high beta names like Indiabulls Housing Finance, which lead the list, 20% down tick for this one itself. Then you have Piramal Enterprises, JSPL, along with RBL Bank, which have also managed to decline about 18 to 20% each.
It doesn't look like a positive one, at least for the banks for now. On that note, we'll slip into a break on this edition of Buy Now, Sell Now, but stay tuned, more news and updates on the other side of the break. Welcome back. You're watching Buy Now, Sell Now on ET Now with Mubina and me, and let's get on board our market veteran voice for the day, and that is Samir Arora. We spoke to him earlier in the day and he said that the markets are under a bubble due to COVID-led uncertainties. Listen in to what else he had to say.
I would think that, the original attraction of the dollar, first of all, who knows beyond a point on dollar? We are not that macro traders. But in a big picture sense, I would have thought that there was attraction for the dollar over the last 4-5 years because there was a big interest rate differential with, say, euro and yen, where the rates were much closer to zero. And the US, at least, you could get 3-4%. Now, as the rates are nearly the same and you will get 0.25% or something per annum in the US, it is the attraction of holding US dollars for their own sake looks a bit unlikely. And therefore, in that sense, I would think that and also the Federal Reserve is saying they will keep interest rates low for long and all that, and they need more stimulus and fiscal stimulus, so they will have to loosen everything or keep it loose. So I would think that will work a little bit in emerging markets' favor and maybe India's favor. But we have not ever had the confidence or the insight to play only on this logic. This is just there in the backdrop, and when it comes, we are delighted with it, but we don't exactly know how that leads to people buying India. But if you see last month, where people actively had a choice of doing what they want, India got 6.2 billion or so from FIIs, which is the highest monthly inflow ever in the history of FIIs in India. So somewhere this thing is playing, but who knows exactly.
Okay, well, there you have it. That's, of course, Samir Arora. It's, very rare conversation that really we have with him. And he has spoken to ET Now, talking about where's the opportunity in the markets. And, the point that he has well made with respect to essentially that perhaps the IPO market could be a sign. The fact that there are so many IPOs as well entering the market, that could be a sign that perhaps we may see some bit of topping out, because all these companies want to essentially come in and, cash in on this rally that we are witnessing in this Dalal Street, or rather the post-COVID rally that we are witnessing on Dalal Street. For now, of course, it's red all across on the last day of September expiry. Okay, moving on, the stock in news, and one seen as a massive wealth creator for investors. GMM Pfaudler has eroded out 50% in its value ever since it has announced buying out the global business of Pfaudler and the subsequent OFS. Ajay Sharma has chatted with the management, Tarak Patel, to seek a clarification on behalf of GMM's shareholders. Take a look.
Firstly, we know the Pfaudler Group for the last 30 years. We've been partners since 1988. We work closely with DBAG and we work closely with the management of Pfaudler for the last 5 years. We have a very clear idea and long-term vision of where we want to take this company. There is a lot of hard work to be done. I'm not denying that, but there are definitely synergies to extract. We have India as a low-cost manufacturing hub. We can use India to kind of export into different regions where Pfaudler is not very strong. Pfaudler has done a lot of bolt-on acquisitions and new products that we can bring into India. So there are a lot of synergies that we can extract, a lot of strengths that we can work on. This company together will become the world's largest producer of Class 9 equipment, anti-corrosion equipment. We will be the market leader, and I think we can go from strength to strength. And we have shown that here in India. We've turned around the business since 2015. You've seen a kind of double-digit growth rate. Our profitability has gone through the roof as well. So we are here to work hard and turn around the business, and I have no doubt that we will be able to do that. I also need to just add here is that a significant amount of work has already been done at the international. You will see a lot of improvements flowing into the GMM Pfaudler, the accounts in the next few quarters. DBAG has spent close to $23 million modernizing 3 key facilities, one in Germany, one in China, and one in Italy. They're going to give us additional output. They are much lower in terms of cost structure. And that's one of the reasons why we did this transaction now, before all these improvements start flowing through. So you will see a lot of improvements coming in. We have a very clear idea in terms of where we want to take this company. There are other opportunities when it comes to increasing the portfolio through acquisitions, to new technologies coming in as well. So from a business standpoint, we are very, very confident that we can turn it around. And India continues to remain very strong. We've already had a very strong Q1. This entire year, the order book is pretty much done for this entire year. Q2, Q3, and Q4 are going to be very, very good. We expect the same kind of growth rates that we've been enjoying for the last couple of years, in spite of having about a 25-day shutdown because of the COVID pandemic.
Right. Mr. Patel, it's very reassuring that you're talking about a lock-in by the promoters. You're also talking about, the way you will be able to turn around. And this entire transaction, the OFS was only about for this transaction. Can you just explain for Indian shareholders' sake, what will be the shareholding pattern of the company now after this entire transaction actually is executed? And what will be the assets this Indian balance sheet will be holding?
Right. So once this transaction has been completed, we as a family, the Patel family, will be holding close to 22% stake. DBAG will be around the 25 to 28% stake. The public shareholding will increase significantly. We are bringing good quality investors in. Like I said, we are changing the face of the company, institutionalizing the company. There will be much more free float. There will be robustness to the stock. There'll be transparency. So that's something that we've always wanted to do. The biggest complaint we have from investors, GMM stocks are not easily available. So this will definitely bring a lot more visibility to the company. The public shareholding will be in excess now of the 50%. So that's what it's going to be like. And at the international level as well, GMM Pfaudler will own 54% of the international business. As I mentioned earlier, we as a family will be investing about 26% into the SPV, and DBAG will also be holding 20%. So there's complete alignment. The 3 partners remain completely aligned in both the international business and the India business. And eventually, after we create value 3 years down the line, we would then look at GMM Pfaudler owning the entire 100% of the international business.
All right, GMM Pfaudler for you. That is actually trading lower today as well. But let's take a look at what are the other stocks that are in focus in today's trading session. First up, you have Sun Pharma. They voluntarily recalled Riomed for NDMA impurity. They said that it has been found to be above the acceptable levels of the US FDA. The stock has fallen for a second trading session, was down about over 3% intraday. That is the lowest in the 2-month level. Next up, you have Tata Chemicals that is in focus because Tata Sons buys about 22.1 lakh shares at 287.58 rupees per share. And also you have Tata Motors DVR that is in focus because Tata Sons has bought about 37.6 lakh shares in that particular stock as well. Apart from that, I beg your pardon, you have ICICI Bank that is in focus because JP Morgan has maintained its overweight stance on the company. They have a target of about 430 rupees per share. They are saying that the asset quality is well under control. They are saying the restructuring is likely to be lower than 5 to 8% that has been anticipated. So JP Morgan is bullish on ICICI Bank. Then you have Ircon International. They've secured a work of 9 road overbridge worth 400 crore rupees from Ministry of Railways, and that's one of the reasons why that particular stock is in focus. Apart from that, you have actually ONGC that is in focus in today's trading session as their fire had broke out at company's Hazira gas processing plant. The company has said right now that the fire is under control and they're expecting to start work, the operations soon. So these are the stocks that are in focus today.
That's, of course, stocks and news. And stay tuned to ET Now. We'll keep getting you a gist of all of that. And here's the big ET Now exclusive. We spoke to Ruchir Sharma about his investment plans for the new decade. We also got in a perspective on a brand new book he's written on the 10 notions he believes successful nations follow. Here's a small excerpt of that conversation.
Yeah, so therefore I think that it is time to relook at emerging markets. I think that I've been quite skeptical of this asset class over the last decade or so, and been speaking about that. But I think that generally places like emerging markets and even Europe are looking much more attractive to me for the next 5 or 10 years, if we can afford to have that patience and that time horizon. And why do I say that? One, I think is very important is the US dollar, that typically these international investments tend to do much better in a weaker dollar environment. I think the dollar has made a very important turning point over the last few months. So the dollar has clearly peaked after an incredible run over the last decade. So I think that that should generally help international investments, global stock markets outside the US do much better in a weaker dollar environment. I think then also the fact that in some of these emerging markets, the valuations are very cheap. And this is possibly the most provocative thing that I will say, which is that, as you know, that I've also been a long-term bear on commodities. And I think that commodities are setting up for a much better decade, given the amount of supply discipline, the rationalization of excess supply that's taken place in the commodities sphere after a very poor decade. So I think that investing in commodities for the first time is looking very attractive to me in many, many years. So that's where you have it. I'd like to put more of my money internationally in emerging markets, and I'm a backer of commodity investments which are looking so neglected today and so out of fashion.
On that note, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned. We'll have the winners of the quiz after the break.
Welcome back. You're watching Buy Now, Sell Now. It's time to reveal our BNSN quiz questions answer, as well as who are the champions of today who tweeted to us the correct answer. We asked you, which of the following has given the highest return over the last 5 years? Is it Cholamandalam Finance? Is it Tube Investments, Coromandel International, or CG Power? Well, the correct answer is Coromandel International. And here are the champions of today, the ones who tweeted their answer, the right answer first. We have Pardeep Kumar, who can be found at the rate K, Pardeep47, Vaibhav Jadhav, whose Twitter handle is Vaibhav39125804, and Venkatesh, whose Twitter handle is at Venkat7070744. So congratulations to all of you. And yes, we have the BNSN quiz that we hold for you every single day. All you have to do is tweet to us your right answer, and you can feature right here on Buy Now Sell Now every day at 11:45 a.m.
And as India continues unlocking, it is critical that the country's economy also revives. To lead a 360-degree programming on this, the Times Network started a special series called India Revival Mission, where regular interaction with policymakers, industry leaders and think tanks help curate an insightful and evolving dialogue about the relaunch, reboot and revival of India's economy. And as part of India's revival mission, Times Network, along with the Institute of Competitiveness, developed an in-depth business perception survey during and post-lockdown, which sources insights from India's business community and present a holistic blueprint for India's recovery and distills domain-specific action points that need to be implemented to ensure that long-term health of the businesses and the economy. So tune in to Times Network this Saturday from 12 p.m. onwards to hear from industry titans as we share the findings of India Revival Mission Business Perception Survey.
All right, have travel plans, if you have travel plans rather that you cannot put off, Sanjay Datta, the Chief Claims Underwriting and Reinsurance with ICICI Lombard General Insurance, says that the best travel insurance, the best part rather of travel insurance is that it will not only cover cancellations and flight delays, but also any treatment costs abroad. With increased cancellation of flights amidst this pandemic and the inevitable delays due to the mandatory procedural checks, non-medical travel insurance coverage will also come in handy and help reduce out-of-pocket expenditure. So listen in to an excerpt of this conversation we had on The Money Show.
So, travel insurance is important to, kind of aid a tool in our travel, in our journeys, within India or abroad, So unfortunately, way travel insurance take-up rate, in India was concerned, the total number of, travelers did not take travel insurance, or if they took travel insurance, they were not, adequately covered, So there were some countries which they went to where it was mandatory, let's say it's Schengen countries. That's where they took it. But let's say the rest of the world, US and other areas, the rest of the world, they didn't take it. But if you look at the exposure to travel risk, it's the highest on the medical side. You could fall sick. There could be issues where you would need repatriation, from those countries back to your, home country. And that involves huge amount of expenses and a lot of logistics and, various other infrastructure, which your travel insurance policy, gives you in terms of, support at that, moment of truth. And so it's very, very important that, it needed to be there. Now in COVID times, in the way we are, where there's a likelihood of us falling sick due to COVID in any country, it's become paramount importance. The medical part of it, along with, the cancellation, the uncertainty around flights getting cancelled, our journeys getting rescheduled. So, all of that gets covered under travel insurance.
Mr. Datta, how do you decide on what's adequate insurance? It could be very tricky, right? And there are so many moving parts. So how do you decide? What are the factors that if I want to buy, an insurance, what are the factors I should keep in mind?
So, the travel insurance which you get in India covers medical exigencies, unlike, some other forms of travel insurance which is prevalent in the world, where it only covers trip cancellation or, just loss of baggage or various other things like that without any medical coverage. But ours is a medical inclusive coverage. I believe that's the lead cover in our travel insurance policies. And in this way, the country in which you travel to and the kind of exposure to costs on a medical emergency is what you need to consider when you think about taking adequate sum insurance. For example, everybody knows the cost of medical care in US is the highest in the world. In fact, if you compare it to India, it's 1/10 in India versus what a similar procedure would take place if you were to do a similar thing in US. So given that perspective, if you have, let's say, a particular sum insured in India, you would need to take 10 times that kind of cover, if you went to US. Similarly, you go to other developed countries where the cost of healthcare is high, you would need to take, coverage which would take care of your illnesses there. And the second part of it, which is where the issues like travel cancellation, various other parts of the risk associated with travel is concerned, they do come in, and they need to be weighed in the context of the kind of trips are you making. Are you making a trip which involves a lot of legs where could be loss of baggage?
We are out of time on this edition of Buy Now Sell Now. Stay tuned. Markets at noon coming up next.